Shifting focus to the broader African markets. Now, at the half-year mark, Ghana's fiscal restraint is beginning to bear some fruit. Finance Minister Forson has delivered the West African nation's mid-year fiscal review under the theme Resetting the Economy for the Ghana We Want. And due to the stronger than expected overall performance of the budget, the revenue target for the year has been lifted by 1.3%. Other notable highlights include the cooling of inflation and strengthening of the cedi. Ghana's IMF program is also back on track. Ridle Markus, SSA macroeconomist at Absa CIB, joins us with his assessment of Ghana's mid-year fiscal review. Ridle, thanks so much for your time this afternoon. How do you rate this review? From what I've been reading, I'm hearing a lot of analysts saying it was aligned to the budget that was released months before, and that, it just didn't deviate from the main budget.
Well, I think we need to just take into account that this is first year, of the new administration.
Yes.
They've taken over the economy at a very difficult time. Yes, Ghana's economy did do extremely well last year, growing by 5.7%, which is a whole lot better than any of us expected at the time. However, on the fiscal side, there were major slippages last year. It was an election year, and as history has shown, Ghana typically, with elections being held every 4 years, they do tend to slip quite a bit as the administration in power tried to hang on for another term. So it was no different last year. So this Mohammed administration then took over and had to immediately address the large fiscal gap. And as a reminder, the fiscal deficit at the time for 2024, according to the provisional data, stood at around 7.9% of GDP. That is quite large.
Yeah.
So I don't think the current administration had any other choice than to focus on fiscal consolidation. And I think that they did a very, very good job doing that. But of course, this is only half-year results, if you can call it that, the half-year overview. We need to see how it goes over the full year. There were some misses. Wages were slightly higher than expected. Also, on the capital budget side, there was a major underperformance. And that just means that the disbursements for capital projects fell or was 60% or 61% below what was targeted. And then also on the arrears clearance side, they paid 2.7 billion cedi less than what they anticipated. And that contributed to the 14% lower expenditure than what was anticipated. But even over the full year, you mentioned a couple of numbers there, the fact that they're expecting on the expenditure side to come in 0.5% below, and on the revenue side coming 1.3% above. That is certainly very admirable. And I think the IMF has also been very complimentary towards Ghana. And they said, as you also pointed out, that the program is rightfully back on track. And of course, for Ghana, it will be important to sustain this during the second half of the year, but also over the next 3 years until the next election in 2028.
And I can imagine a lot riding on President Mahama and his administration as they take over, considering the state they found the fiscus when NPP was in government. Talk to me about public debt then, Ridle. I see that it, declined, and the debt to GDP ratio also fell from 61.8% to 43.8%. Let's look at some of the efforts at play there.
Well, of course, first and foremost, I think the biggest driver there has to be the currency. You don't get a near 20 percentage point improvement in debt unless something major has shifted. And the currency, the dollar, or at least the cedi, has strengthened probably close to 45 to 50% against the US dollar in the past couple of months since mid-April. And that has certainly helped the debt numbers. But as you pointed out, to come down from nearly 64% to 44% of GDP is a major improvement. And keep in mind that Ghana is still under debt restructuring. It has not completed the process. It has completed the domestic debt restructuring and also the Eurobond creditors, but it is still trying to work on completing restructuring on commercial creditors. So there's a strong focus here on debt. And as they've announced in the mid-year budget, there is a budget liability management process underway as well. And these are all an attempt to reduce the interest or debt servicing costs and lengthen the maturity profile of some of the debt, etc., just to give government a bit of a breather, increase fiscal space so that they can attend to much more urgent issues around education, health, etc. So, yes, that is a huge priority to reduce that. Currency has so far helped. And of course, they will be out over the next couple of years by policy rate cuts as well, cheaper financing, we hope. And that will just make the job so much easier for President Mahama.
So we've noted a stronger currency in Ghana. We've also noted slowing inflation as well, their efforts to slow inflation really picking up steam on that front. Let's talk about revenue for a bit, right? Coming in short of target, but they have they've increased their revenue target for the next year. Talk to me about what's fueling that, and perhaps let's touch on some of their economic plans. I know Ghana is planning on creating a 24-hour economy.
Yeah, indeed. Let's start maybe with the latter. So the 24-hour idea is really to give attention to the nighttime economy and trying to build that out and hopefully help the nighttime economy, as they call it, to make a bigger contribution to economic growth. In terms of the broader plans, I mean, certainly return to macroeconomic stability, and thereafter also you might not have seen it in this particular budget, but in the budget that was presented in March, you would have seen that they're planning a massive ramp up in capital budget for next year. It's probably about 30% larger than the target for this year. So there's a huge amount of money going into infrastructure projects, etc., from next year. This year is the year of fiscal consolidation. The improvement in revenues is simply on the back of probably a much better than expected economy. I think the economy has so far surprised us as business and consumer confidence levels has improved. The agriculture sector is really booming. The mining sector, especially gold mines, gold mines have really performed very well, and it's a major factor behind the stronger currency, the larger trade account. So there's so much going for this economy at this point in time. Referring to the inflation, inflation has come down from nearly 24% just 6 months ago, and is standing at 13.7%. And we expect it to fall even further, just like government. And that should open the door for further policy rate cuts. We are waiting to see what the MPC that is sitting at this point in time and will deliver his decision tomorrow, how big that cut will be. Is it going to be 200 basis points or even larger? But we think substantial cuts in the second half of the year. Now, take into account low inflation, substantial policy rate cuts. It means increased consumer affordability, increased demand, and that's a very vibrant economy that's coming through from Ghana's side. And I think on the back of that, they are really hoping that hype of economic activity, so to speak, will really push, especially VAT that has underperformed in the first half of the year, but also other revenue areas.
And just with that being said, I can imagine that investor sentiment is also upbeat. We've also just recently heard of Fitch raising the West African nation's credit rating.
Absolutely. And I think over the next couple of months, we'll probably see more upgrades for Ghana. And especially once they complete the debt restructuring with commercial creditors, we're probably going to see a flood of rating upgrades coming through. There's just so much anticipation at this point in time for the reopening of the primary bond market. I think in visiting the US just 2 months ago, talking to investors, there was a lot of interest in when Ghana will reopen. We did see the minister did indicate that during the second half of the year, they will open the market, and that probably means more funds coming into this market as investors are really excited about the Ghanaian story.
All right, let's leave it there. Ridle, thanks so much for your time and taking us through those insights. That was Ridle Markus, SSA macroeconomist at Absa CIB.